Hello everyone, welcome to Money Control's Ideas for Profit. The company that we are going to discuss today is Stylam Industries. The company is a manufacturer of laminates and derives majority of its revenues from the export of high pressure laminates to more than 60 countries around the world. The company had a very strong first half of this fiscal year. On the top line, they did a revenue growth of more than 40%. The operating profits came in much higher at 55%. This was primarily on the back of higher realizations and the higher volume growth that the company was able to achieve in the first half of this fiscal year. Talking about the key highlights of the business, the company has seen a consistent financial track record performance over a period of FY14 to FY18. The revenues have grown by 16%. The EBITDA margins as well as the EBITDA has grown by a much higher pace. The EBITDA margins have expanded from 9.6% in FY14 to around 14.6% in FY18. In terms of top line, it did a revenue of around 338 crores at the end of FY18, which translates to a revenue market share of around 6.5 to 7% in the domestic laminates market. In terms of domestic laminates market, which is pegged at around 5,000 crores, Greenlam and Merino are the two heavyweights in the segment and have a much higher revenue base in terms of in comparison to Stylam. To be able to grow the revenue base further, the company has actually expanded its capacity from 4.5 million sheets to 11.0 million sheets. The expansion has been incurred through an investment of 75 crores, which is funded through a combination of debt as well as equity. It is due to this primary reason that the company's debt-equity ratio increased to 2.4 times at the end of FY17. However, the same has been coming down in the past 18 months and the current debt-equity ratio stands at around 0.8 times. To be able to bring down the debt further, the company is actually planning to monetize the land held at its Panchkula IT Park. The land is valued at around 45 to 50 crores and the monetization of the land will result in bringing down the debt levels come further lower. Well, talking about the industry is growing at a steady pace of 5 to 6% per annum. Stylam, with its capacity in place, remains well positioned to grow in the domestic as well as the international market, and it has historic track record of growing faster than the industry. In terms of the valuation, it is trading at 17 times FY20 earnings, which appears fairly reasonable for accumulation from a long-term perspective. We advise investors to enter into the stock with a long-term perspective. Thank you. That's it from my side. For more views and updates, do log on to moneycontrol.com.